awesome perspective on macro. In general, what are your thoughts on Bitcoin?
Well, I think that let me answer that in two ways. I mean, one is what is the case for crypto? I think the case for crypto is that is a compelling one because basically crypto, in theory, has restricted supply. It is not subject to the same forces as paper money, which is government issued debt, effectively. And we know that governments or the fiscal arithmetic facing governments is horrendous. So basically, in terms of supply considerations, crypto has to be a better vehicle. There is a demand case for crypto in certain cases. Now, I would be the first to say that that may be in certain areas slim and in other areas compelling. If you look at things like the Ripple currency, which is a bridge currency, I think that has compelling attractions as a crypto unit. I think there are other crypto which I simply don't understand, and therefore I'd be the wrong person to comment. I think in terms of Bitcoin, it's established, it's first through the door, it's got a name, and it's approved effectively by the SEC as a currency, and therefore we've got a number of issuers in the US trying to do ETFs on Bitcoin. So hey, why not? It probably is a decent alternative.
So when you see the BlackRocks, the Citadels, the Fidelities in their own ways getting into Bitcoin, does that open you up to getting exposure in your business for your clients, or is it too
Correct. I
early?
think that one has to have some exposure to crypto. I think it's, as I say, it's through the door, it's an established medium. I think you've got, as I say, a varying use case, but providing supply is more constrained, which in theory, at least it should be. There's a compelling argument that these are decent stores of value, but don't just rely on those things because we've got to acknowledge the history books, and the history books show that if you go back to the 1930s, there was it called I forget if it was called the Gold Act, but it wasn't in 1933, 34, where Roosevelt basically made holding of gold illegal for US residents, and that was something that probably could not be done now. But hey, let's never say never here, and that's something I think we've got to consider. So diversification is clearly the key thing. One of the things that governments don't like doing is losing potential revenue streams.
You have decades of experience as an investor in general. So if you're just talking to crypto investors, could you give some advice to these crypto investors coming into the market in these last few years?
I think there are two things to say. One is that the most important variable to understand is or are money flows, and you've got to understand how the system is working. Basically, what I specialize in is looking at asset price inflation, and asset price inflation is all about understanding money flows from a macro standpoint. Now, I'm not saying, and don't misinterpret, I'm not saying that looking at individual securities and adopting a value investing approach, a la Ben Graham, doesn't work. Clearly, it works. That's a pretty good discipline. But you've also got to look at macro. And macro is all about understanding money flows and how those money flows are allocated. And effectively, this is a portfolio decision. So if that flow of money is going to increase in the future, and I would argue that money flows, because they're created by central banks and by governments at the end of the day, have to increase, okay, then we as investors have got decisions to make as to how to allocate that money. And basically what you've got, I would argue, are sort of three basic pots. You've got traditional bonds, which in an environment of high monetary inflation are not going to be decent performers, particularly if governments can't afford to let interest rates go up too much. The second thing is you've got equity markets. Now, equity markets can do well in a higher inflation environment. They will not do well in a very high inflation environment, but they'll do well in a high inflation environment. And just remember again the history books in examples of hyperinflationary economies. Think of what's happening in Zimbabwe now, right? Think of what's happening in Germany in the 1920s. The stock markets were extremely strong performers because they were inflation hedges, okay? Bonds did badly. Now, as I say, there are better alternatives to the stock market when you've got very high inflation. And that comes back to traditional monetary hedges, such as real estate, such as commodity markets, such as precious metals. And I would add probably crypto as well in that same sphere.
Michael, I want to give you a fun question, more thought-provoking question. You don't have to mention cryptocurrency at all, but say you were 25 again, starting over, and you had an extra $1,000 in your pocket. How would you go about forming a portfolio or investing that $1,000?
Well, I think the first thing to ask is what is the time horizon? But let's assume I'm going to say let's assume you take a 2-year time horizon for argument's sake. I would have probably I'm going to exclude real estate because that's clearly a social decision. But I say that of that, I would tend to be putting about 80% in stocks and 20% in inflation hedges. And I think the preference you can say is, do you prefer gold or precious metals? Which is probably, let's say a generational decision. So basically people, like myself or maybe older people would tend to think that that is the best inflation hedge because traditionally it has been. Or you'd say, okay, for a younger cohort, you want crypto. So I'd be thinking of that 80-20 balance.
And when you say 80% in stocks, what type of stocks? Or could you give me some breakdown on what you would be
Yeah,
looking at?
I think that if you, I mean, this is back of the envelope, but I would say that probably for a US investor, you'd be wanting to put you'd want to diversify 20 to 30% of that. I would tend to think that at the moment as we stand, a large part of that diversification ought to be in Asia, into countries like Korea, Japan, as alternatives. Those look attractive to my view. And if there is a coming Cold War with China, then these economies have to be bolstered anyway as a bulwark against Chinese expansion. So I think that economically they may prosper. So I would say that that would be my bent in terms of geography. I think in terms of sectors, I think one has to acknowledge that technology has a place in every portfolio. And I'd also say that commodity markets probably also, because in an environment of, let's say, heightened geopolitical risk, resource availability and securing resources has clearly got to be key. And we've underinvested in this area so much over the last 20 years that there's got to be a lot of money moving towards commodity areas. So I'd say those have got to be fairly big weightings within a portfolio.
Final question, and this is more about you, not so much about the current state of the economy, but for you, could you finish the sentence? I became successful when I understood blank.
Oh, I think the key question is understanding global liquidity, and that was something that was taught to me at when I was at Salomon Brothers. And I think the thing to look at is why was Salomon Brothers such a dominant and such a successful investment bank through the 80s until the mid 90s. And basically, what happened, if you look at the history books, it was derailed because of errant traders trying to corner the treasury market, and Salomon was slapped down, understandably, by the U.S. administration. But up to that point, it was a money-making machine, and it was all about understanding the flow of money around the world.
Yes, be sure to click subscribe. We drop a video every single day, keeping you informed about crypto.